Play spoil sport, but thanks Anuj for taking us through a detailed analysis of the day's trade. But the other big story that we have been tracking today, Union Cabinet has taken new steps in a bid to ensure farmers get the minimum support price for their produce. Now, Centre has cleared a new procurement policy to provide compensation to farmers if they sell below the MSP. Another project will be launched on a pilot basis to allow state governments to rope in private players for procurement. Manisha Gupta is here with the analysis of this. Manisha, explain how this new procurement policy will work exactly.
Well, thank you so much for that. It has been a much awaited one, and we have seen 3 schemes that the government has laid out for ensuring that the MSP that they announced in the month of July, 50% cost of production is put out for the procurement there. One, of course, is the price support scheme. This is majorly for oil seeds and pulses. This is something that has been going on for many years now. What the government has added to this is the price deficit scheme. Now, government will credit the difference of the model spot and the MSP in the farmer's account. This is the Bhavantar Yojana that the Madhya Pradesh government had kick-started, and the other states, of course, have tried that. So this is a new thing that the government also wants to allow or want other state governments to take in. The third, of course, and this is the first time this is being done in India, this is about the private procurement and stockist scheme. In this, as we were talking earlier as well, this is the first time that they would be allowed to do this, and there are reforms being created that, earlier when the private companies would buy too much into commodities, a government would come out calling them stockists or hoarders, and there would be stock limits for many of those commodities in various states. That is something that perhaps would be taken off, and for this they would also be incentivized. So it would be left on the private companies on what commodities they want to buy and how they want to use it and when they want to delegate it out. So this is something that the government, of course, is trying for the first time. I also caught up with the Agriculture Secretary Shobhana Patnaik to discuss the details of the Cabinet's decision regarding the MSP. Let's listen in. My question really, first of all, is about the private procurement and stockist scheme. This is the first time that this is happening. How do you look at the supporting reforms onto this one? What kind of proposals still are being awaited to ensure that this becomes a reality?
See, the government believes in really encouraging the private sector to come in a very big way into the areas of, giving fair prices, fair and remunerative price to the farmers. And we are also aware that in the oilseed sector, there are big players and they have got a lot of space which is available to really, procure, stock them, and also do value addition to convert oilseeds into oil and sell it at the right appropriate price to the consumers. So we would like to tap on their expertise as well as their willingness to participate in this venture. So for the first time in the history of our country, we want to launch this new scheme, which is called by the name of the Private Procurement and Stockist Scheme. And when this scheme was announced, we also would like to incentivize the private sector by giving them some support. And they will be procuring at the MSP value. They will be storing it, and they're free to sell it at whatever point they want to at a later date. And there will be no restrictions on sale. They can export. They can do whatever they feel like.
What kind of incentivize, what kind of incentivification are you looking to give to them? Is it going to be on the tax part of it or some reimbursement? How is the government working on that?
No, actually the administrative support cost up to 15% will be, we will bear it in case it is justified with suitable this thing. And secondly, we will also like to, one of the industry has been always speaking about stock control order being applied on them. So to that extent, some regulatory measures which exist that will be relaxed for in case.
Well, that's some game-changing points there, and clear point and details coming in from the Agriculture Secretary. But the other thing that was announced in Cabinet today is also critical. Manisha, the price of ethanol has also been hiked to provide some relief to the sugar industry. How significant is this hike, and what exactly would the impact be then?
Well, this clearly has been a cheerleader when you look at the cabinet decisions, because we have seen good amount of price increase coming in, as the government had been promising up to 25% of an increase. So whether you look at the C-heavy molasses, the B-heavy molasses, and if you are looking at ethanol production from pure sugarcane juice, 59.19 is the price that the government has come out with per litre. Now, this is very timely because, one, there is surplus sugar into the country for a third straight year, and we perhaps are looking at a record sugar production for the next year as well. Ethanol blending has picked up. We are more than 5% on that. 10% is what the government is looking at. And with this pricing that we're looking at, the expectation is that you will see the sugar industry actually take use of this. Another important thing is that with the petrol diesel prices looking at where they are, ethanol blending perhaps comes at a positive time. It, of course, will take 1 to 2 years before you put in more investment coming in, more distilleries being put up by the sugar companies. But this definitely is a very strong, good step in the right direction. And we clearly have seen the sugar stocks cheer that.
Oh, absolutely.